Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. It's a hump day. I hope it finds you well. Starting to warm up. Yeah, starting to slowly hit the defrost button out there. It's been a crazy week or week plus of pretty cold temperatures. I know up in Colorado, we're talking negative. Most of the country was negative here in Arizona. Not bad, cold at night, cold in the morning, but pretty decent during the day. But getting back to normal out there, and of course, what is normal any longer, right? The playoffs, football playoffs, right? Super Bowl, Phoenix Open, all of that coming. I know that, kind of the end of the holiday season. The Super Bowl and the Phoenix Open, okay, well, I guess it's not that anymore. The Waste Management Open. Our toll-free number, 800-951-0592. The website at allamericangold.com. And wealth insurance. Physical delivery of gold and silver. It is what we do. We have a big, a reverse rally in the bond market, the 10-year yield spiking. Not a big story. Listen, this is more of a paper story that, maybe we got ahead of ourselves. Maybe they're not going to cut rates 6 times and all that stuff. Put it this way. Great buying opportunity because again, this is the calm before the storm. Right now, we don't have Jason on video. We've got a part we're waiting on. Good old Amazon. It should be there sometime, hopefully tomorrow. And then you can see Jason's pretty face if you're one of our YouTube or Rumble listeners. We appreciate you guys out there. Like us, share it, subscribe. Hit all the buttons you're supposed to hit. The buttons you're supposed to hit. But Jason, you're with us. We just can't see you.
Yeah, I'm here, and I'll be here for the both shows, and going to report the happenings that are going on. Everyone thinks that, I guess, the Fed, they're not going to lower the rates, and so the market's got a little timid, I guess, Joe. So dropped off a little bit yesterday.
Yeah, and let's be clear, they're not going to lower the rates at the next meeting. That's like the big shocker. I mean, as we know, that's not how the Fed operates. Like I said, I think it's just more, dare I say, they're bored and want to make a few bucks on the paper trail.
What I think it is, Joe? What I think it is I remember as a kid, my parents would wrap the presents for Christmas like a week early or something. And my brother and I'd be looking at these presents. We got to wait till Christmas. You get to open one on Christmas Eve. And the whole thing would be the day before Christmas Eve. We want to open the present. We want Christmas Eve. Right? I think that's what happened with the rates. They wanted Christmas Eve, isn't that what they wanted? They didn't get it, so they got unhappy.
Hey, you know what? Let's just call it Hanukkah and let us start 8 days, of opening. You're right. Kind of that's a great analogy as to what's happening today. I'll say this: Jamie Dimon warned. The guy just warns every week now because I think he really wants people to understand what's happening out there. What's funny is yesterday, Joey. You guys know Joey. He lives in Chicago. He lives in Chicago. It's been brutally cold. And he had to call AAA because his car wouldn't start. Dead battery type thing. They came out and they jumped it and did that stuff. And they were just like, it looks like your battery's okay. It's just so cold that it just kind of froze up. And this morning, I come in and I'm getting ready for the show, looking at, what are we going to talk about today? Out of Chicago, Tesla owners and these electric cars, right? We're going to learn a lot, aren't we? It's one thing when you live here in Arizona and you don't spend the summer here and you drive it around town. I got a bunch of friends that have them. They love driving it around town. They do. Hey, I got to go 20, 30 miles. It's great. Only one takes it out of town. Most of them are like, yeah, I won't even go to Sedona with my Tesla because I don't, the battery, charging, all that stuff. But apparently in Chicago, the temperatures were so cold that the charging stations didn't work, Jason. They were plugged in, but no power. The batteries were not taking the charge, and apparently all the Tesla charging stations in Chicago turned into like a big graveyard parking lot. All these Teslas were there, but none of them could actually charge their battery.
Yeah, well, that's what made the automobile such a great thing. It's got its own encompassed, inside the car system for doing what it's supposed to do. And, yes, you need gasoline, but as long as there's something in the tank, you're going, right? And with the electric cars, yeah, the electricity goes out or you have some sort of electrical issue. I can't tell you how many electrical issues I've had. I've had cars that have had tons of electrical issues, but the car would still drive because they had the gas in it. So I get the whole idea about electric cars, but man, there are so many problems. I see that. But there's so many problems that we haven't seen. I know in Colorado, just like a week ago, one of the local houses burned down because a couple of the electric cars' batteries started blowing up and catching on fire. And maybe you need to slow down until you get it right the first time instead of having to suffer the extra pains from going too fast, Joe.
Yeah, well, I heard like the fire departments are trying to get these blankets, or I don't know what else to call it, because you can't put those fires out, right? These Teslas catch on fire, you can't put them out with water. But yeah, who knows? Don't worry, we're all going to be living in 15-minute cities anywhere, and most people won't even be able to afford a car. Patriot Radio News Hour. We'll be back after the break. 800-951-0592. Getting a little charge in the tank here on this Wednesday. Quick look at the markets. Everything's pretty much down today with the bond yields rising. The 10-year note it's been as high as like almost a 4.15 right now. 4.1 and change. Gold's down 15. Silver's down 30 cents. Again, great buying opportunities, but holding well above 2,000. Gold's got really comfortable here at $2,000, but with Jamie Dimon with another warning about 2024, but it got worse today because then he threw in 2025. He's been talking about 2024 for a while, but now said, listen, 2025, it's not going to be any better either. Being diversified, I think, is the name of the game. But we say it all the time. Don't put all your money into gold and silver. Don't do that. It's like having all your money in the stock. I can't believe the people that have all their money in the stock market and think that it's going to work out for them because that's just not the case. Being diversified is going to be key here. This is why we've been talking about why refi up to 10.25% rate of return. It's fixed. Your interest is compounded daily. You can turn your income on. You can turn it off. You can do whatever the heck you want with it. It's not correlated to Wall Street or the Fed. That's the big thing, right? Having something else that hey, I've got my gold and silver. You got to have stocks. Listen, have we ever said don't buy stocks? No. Got to have it. Got to have it. But be more diversified here. I think, anything, the days of these people, look at the last 2 years. Down 20, 30, 40%, depending on what it was. This year, right? Up 5, up 10, up 20%, depending on what it was on Wall Street. I think the volatility that we've seen over the last 3 or 4 years, I actually think that goes away. I think it's going to be very hard, especially over the next, say, 5 years, for Wall Street to go much further because the debt game's up. Right? We're already at the limit, right? We're already kind of burping up our food, if you will, right? We keep trying to choke down all this debt. and we're having all of these problems now, choking it down, right? You know how it gets, right? You keep eating and eating and eating. Next thing you know, you're 500 pounds. You're hooked up to the oxygen machine, right? You got to go in for bypass surgery and all that. I mean, that's kind of where we're at when you think about it. Check out Y Refi. Like I said, up to 10.25% fixed rate of return. You do have to have $50,000. Listen, that's not their rule. The $50,000, that's not them. That's the government and the SEC. They're the ones that require them to do it this way. You can use an existing IRA. Some of you can use a 401k. InvestYRefi.com or just call them. 888 Y Refi 24. Over the weekend, Jason, I saw this, and I meant to bring it up yesterday, but we didn't get to it. Talking about the stock market. It's absolutely incredible with Americans participating in the stock market at an all-time high. So never before have more Americans been in the stock market. Of course, most of that, as everybody knows, it's through a work 401k by and large, right? No more pensions. You know, even when I first started working at the drugstore, my health insurance was free, right? A lot of people, now I didn't have it, but a lot of people that had worked there for a long time had pensions, right? But fast forward to today, there's no pensions. Right, you're forced. Hey, you want to save anything, you got to save your own. Maybe if you're lucky, the company does some kind of, hey, we'll match, 25% for 2% or something like that. Maybe you get a little bit of a match. Everyone's health insurance is a fortune. But a record 58% of households were owning stocks in 2023, according to the Federal Reserve. That's a record. So 6 out of 10 households, somebody's got some stocks. Here's the problem, though. According to the Fed's own data, 93% of all stocks are owned by just 10% of the households in America. And Jason never, so we have two things. Record high participation, right, which you would think would be okay. Well, if we got that, right, it's more diverse, right, it's more spread out. Never in the history of Wall Street has it been so lopsided where the very few own the majority of the stocks, Jason.
Yeah, that's been going in that direction for a while, just kind of slow and steady like the 2% inflation. But now look at in these times of higher inflation, how it just seems to be moving very much quicker that way. And that's one simple reason. If you own things like a company or a commodity like gold, it goes up in value because to buy the company from Joe or to buy the gold from Joe, you have to pay more to get it. If you're not holding anything, then what you have is depreciating your savings account, your paycheck not going up with inflation. And so, Joe, the fact that 10% of households own that much is not a surprise. That's going to be much worse. The next 5 years, I can see you double that number, Joe. That's how fast things can move in the wrong direction for the average guy out there, Joe.
When you think about it, I mean, the last 10 years has been really good for stocks, right? Because, with the bottom and the big move, right? This monstrous return. Monstrous. And it only helped a very small few of the people out there. Matter of fact, if you took half the people that own stocks, they don't even own 1% of the stock market. The bottom 50% don't even own 1%. But it truly is amazing when you think about what's been happening. I think it's another one of these microcosms, isn't it? The end of the middle class, isn't that kind of this? right? The fact of the matter is a lot of people, hey, I'm in a 401k. I'm putting a little bit of my money away. It doesn't buy anything. Right? I don't have the means to buy outside of it. And again, what we end up finding out is the second trouble arises, Jason, a lot of these people have to sell what little bit they have.
Right, and you're talking middle class, which there doesn't seem to be a middle class. There's working class, and then there's living off the government. I mean, you get people that have household income of $100,000. That's a 10-year millionaire as far as earnings. Right, Joe? I mean, it used to be household income was $50,000, and that was pretty good. That's 20-year millionaire income. So, yeah, middle class, Joe. I guess in America we're blessed to live with a high standard of living versus some countries, but middle class is really you got white collar and blue collar, right? That's about it. Whereas the middle class, the vacations every year, the pension, the paid vacations, the early retirement. There's very few of those left, Joe, as far as I can see.
You brought up a great point. Early retirement. Remember, that was another thing. Think about the things they used to talk about. Balancing the deficit, right? We want a balanced budget, right? They didn't talk about maybe paying down the debt, but at least let's stop going into debt, right? No one talks about that. Matter of fact, I don't know if you just saw, it's incredible what these guys are agreeing to. So I don't know. A lot of you remember the Trump tax cuts, right? So we gave big business these tax. We can't compete. Remember that it was beat into our heads. We can't compete. And look at these companies are moving to Ireland or having an address in some foreign country, and they lowered the taxes. Of course, blew up the debt. But at the same time, if that wasn't enough to get everyone to go along with it, well, we'll give the consumer some money too, right? Increase the child tax credit and some of this other stuff. Well, that stuff was supposed to expire. Not the business stuff, right? That was we're gonna lock in. Did we really need it? I mean, was it worth it? Down 37,000. Was it worth it? No, of course not. Of course not. Right? It was just a made-up, believed story. Listen, if we wanted pharmaceutical companies to stop incorporating in Ireland, we could have done it and without any tax breaks either. That would have been real simple, but no. And I hate paying taxes. Listen, I don't blame businesses. Right? It's the let's have the government pay for everything problem that we have here. Well, it's a problem now. Congress now has already agreed. You know what? Forget it. Let's not take away that extra money we are giving consumers. I know when we wrote the law, we said it was going to go away. Jason, they can't stop spending. They just can't do it.
Yeah, that's exactly right. And I understand, in my understanding, my learning, that the corporate tax should be zero. Corporate tax should be zero. And I had a discussion, I think, on the day that you were. It might have been one of the days you were gone last week, but one of our favorite callers came in and was challenging that line of thinking. And corporations, they need to pay their share. And I was like, well, corporations should pay zero. We're the ones who pay the tax. Corporations build all their costs into what the consumer pays. But I can tell you, one thing is why corporate taxes exist and why they have to stay high is because if a corporation pays zero corporate tax and then they ship their goods off to another country, the federal government doesn't get theirs. And the local governments get whatever consumer tax comes from those companies domestically. So the only reason there's a corporate tax, Joe, is because we're as a government afraid to charge tariffs to goods coming into the country, because who doesn't want to sell to America, the best consumers on the planet, right? They're just too many favors, too many deep pockets.
Yeah, we're such a good consumer. We're willing to go boatloads into debt just to keep buying. That we had a decent retail sales number. I'm sure it'll be revised lower, like all the numbers, but all of the gain in retail sales plus was done on debt. Credit cards, the buy now, pay later, hundreds of billions of dollars. The consumer has never, think about this, they've never owned less stock, even though record participation, and yet they own less. Record levels of debt, right? The consumer has never had this much debt. And of course, it's all the wrong debt, right? It's credit card debt, student loan debt, right? All auto loan debt. You can even argue about real estate debt, but they've never been this much up against it. And when we start looking at taxes and everything else, the governments, they're just like the consumer. They just refuse to be fiscally responsible. There's no these tax credits. As much as I get it, they need to expire. We're going to have to pay more tax. I don't know why people don't understand this. And really, what we really need is less government. Right? We don't need to pay more tax. We've got to say enough is enough. And Jamie Dimon, Jason, that's really all he's talking about. He's like, people they're clueless. The amount of debt is going to destroy the markets.
Agreed. Absolutely agreed.
Take the Radio News Hour. We'll be back right after the break. 800-951-0592. Buy the pullback here. It's not going to last, and take advantage of some great pricing. Yesterday we ran $5 Indians. We do not have any more. We completely sold out. I did not think that was going to happen. We sold more $5 Indians yesterday than we have probably in the last, 3, 4, 5 years combined. Hundreds and hundreds of them. We thought we had plenty. I didn't even worry about limits. They are all gone. Today we've got about 75 $10 liberties as we're seeing some of these big players coming back into the gold markets here. 1,095 on $10 liberties. These are the older ones, 1866 to 1907, half ounce of gold piece. 1,095 if you buy 10 or more. 1,090, 20 or more. 1,085 at 800-951-0592. For you silver guys out there, I got silver below $23 right now. Rolls of silver quarters, 40 pre-1965 silver quarters, $190 a roll. If you buy a quarter bag or more, so a quarter bag would be 25 rolls. If you buy 25 rolls or more, we'll take the quarters to $185. 800-951-0592. And, man, we've got a battle ahead of us. If you go out to allamericangold.com, our lead story out there today, the Federal Reserve realizing their mistakes. Of course, not actually admitting to that. No, you don't have to admit to any mistakes because you're just there trying to fix the problem. After the bank failures last year, went back and said, man, okay, you're right. These rules that, I know we said we fixed too big to fail. They never really did, right? We all know that, right? How do we know that? Well, because those banks are even bigger now. But they decided we can't really trust these banks to do the right thing, right? Because we got to remember, they tell the banks, okay, you have to have X amount of Tier 1 capital. And that's like U.S. Treasuries and things of that nature, right? You can have X amount of Tier 2 capital. So that maybe not, it's not U.S. Treasuries, but, fairly decent commercial real estate or something like that. Maybe a high credit score, auto loans, stuff like that. right? Not junk, not great, but not terrible. And then, of course, they can have X amount of, we'll call it what it is, junk. Right? Low credit score, low credit card, or low credit score, credit card debt, low credit auto loan debt, right? Because you got to remember, right? They get more interest, right? Tier 1, they get the least amount of interest. Tier 2, they get more. Tier 3, that's where they get the most. And they said, well, banks, when we didn't have those rules in place, banks just did the wrong thing and loaded up on all the crappy stuff, and that's why everything went to hell in a handbasket. Well, that really wasn't true. Fast forward to today, and then the last thing, the fourth thing is, hey, this is money you can't invest. You just got to have this amount on hand, right, for deposits, to pay for bills, and, obviously, they got their own expenses, but it's there as a buffer, right? A bank run, what have you. You gotta sell some of this tier 1, tier 2, tier 3 at a loss. You take it out of this reserve. Well, obviously, those reserves aren't good enough. Even with them forcing the banks into, hey, here's how you can spend your money, they still do a bad job. They don't hedge it right. They don't take the right precautions. Right? We got these problems. So they decided, we're going to make the banks keep more money. The fourth bucket. You can't buy any tier 1 assets or tier 2 assets or tier 3 assets. So money they can't make money on. How's that, right? The deposits that they're not allowed to make money on. Jason, the banking industry is freaking out. They're talking about taking the Federal Reserve to court, saying that the law that the Fed has written needs to completely be totally overhauled, calling the rule completely unreasonable. And Jason, this just tells you, and why am I bringing it up? Because I think it highlights there's not a lot of cushion there. The banking industry isn't nearly as healthy as they want people to believe.
The average worker having their hours.
Oh, there he is. There you are.
It's kind of like the average worker having their hours cut. The bank uses this money to put it into something and make money on it. And if you don't have that available, you don't get to make money. It's kind of like the Uber driver who suddenly Uber's like, you know what, we just don't need this many Uber drivers on the road. We're just going to shut off 10% of you, and suddenly you just can't make the money. I mean, this is where the banks go to continue to fold over that money and keep money rolling in. They could do other things, Joe. They absolutely could do a different model if they wanted to, but that's just not the system that they're in. And so, yeah, they panic because it's like having no gas in the tank to go drive your car for Uber. It stops what they do. And I think there's going to be a lot more of this going on in the future, Joe. There's going to, at some point, you can't please everybody at all times. And we know there's a chosen few banks that are going to always be supported. All the rest of the banks are on the chopping block if things go bad, Joe.
Yeah, and again, it's something where you need to think about this. It's not like they're making some huge, oh my gosh, you've got to double the amount of capital. I mean, any amount here, and now the banks are saying this is unworkable, we can't do it. It's unprecedented for the Fed. In the 20 years I've been doing, I don't know that I've ever seen them actually undo a rule, because before they write these rules, they usually go out and talk to the bank. Right? It's kind of it's a done deal way ahead of time. This one here, though, Jason, I think it just highlights the situation we're really in. There's no good answer here. The Fed knows that the banks need to have more capital set aside. The problem is the banks are saying, if you do this, the whole thing's going to come crashing down. Patriot Radio News Hour. We'll be back right after the break. 800-951-0592. Joe and Jason, Patriot Radio News Hour. How safe are the banks? And that's something that all of us have the right to know. And yet they go out of their way to make it impossible for us to know. Think about this. Since March of last year, the Fed has created an emergency lending facility for banks that, as account balances drop, as depositors pull funds, they've run out of money in that fourth tier. So remember, there's really four tiers in banking: tier one, tier 2, tier 3. Right? And the lower the tier, the more risky the investment. Obviously, though, the more reward for the bank as long as they pay. Of course, that fourth tier, hey, that's the money you got to have on hand. These banks have run out of that money. When that happens, okay, well, you got to start selling some of these tier 1, tier 2, and tier 3 assets. Well, nobody wants to sell the tier 3s because they're going to lose a ton of money, because everyone's like, yeah, the economy's we're waiting for the crash. Yeah, we really don't want to buy that. Yeah, you got $10 billion of tier 3. Would you take $4 billion? No? Oh, well, then we're not interested, right? Tier 2, you got $10 billion there. I mean, would you take $6 billion? No? Oh, well, then we're not interested. Tier 1, I mean, those are treasuries. Hey, I got $10 billion in treasuries. How much you give me? I don't know, $8, $9 billion? Wait, I got to take losses? Well, I'm not J.P. Morgan. I can't afford billion-dollar losses. We're going to go insolvent. We're insolvent. So what they did is they created this facility that the banks could use, and they're handing over these tier 1, tier 2, tier 3s, and the Fed is paying them what the market won't. In other words, we'll give you full value for it, which nobody will, in order to pretend that you're still solvent. Every week since then, except I think of one or two, the amount of banks borrowing keeps going up. And remember, yesterday I told you, now it's really going up. Instead of $100 million, $200 million a week, it was $1 billion, $2 billion, $4 billion, $8 billion a week. And the facility closes on March the 11th. Now, you would think, well, hey, tell us what banks are doing this. Because is my bank doing it? Because maybe I want to move my money out, right? Because, man, if they're having a problem, shouldn't I be able to know about it? And the answer is no, Jason. They don't want you to know. They won't disclose who those banks are. They won't tell us if your bank's in trouble. It makes absolutely no sense, but I think it highlights, and this is the thing that I think most people have a hard time accepting. The Fed's job is not to look out for you and I. It's not their role. They don't care. Their job is to protect their system, and we truly don't know what the real health of the banking industry is. And then when I see this, where the Fed's like, well, we want you guys to have more capital, more of this tier 4 stuff, and the banks are freaking out, I think it really tells you, how safe is our money really?
I might have this wrong, but you talk about the bank term funding program. Is that the one? I heard that one ends at the end of March.
Yeah, March 11th.
Yeah, I heard it goes even. From what I saw, I was just looking at this yesterday. It maybe to the end of March, but then they stopped buying treasuries at full price. They stopped floating treasury. I've heard without this program, what we were seeing with those rising rates, things would have completely blown up because they're sponging up all the stuff that's not being bought. So the auctions don't really matter until this program comes to an end. And at the same time, the cash is ending out of the reverse repo at the end of March. So all this is, this is where I think the lowering the rates is going to be end of March or April, whatever meeting coincides with these two programs coming to an end in March, Joe.
I really believe, and you're making a really good point, there is a big plumbing problem. Forget about the jobs, forget about the consumer and how healthy or unhealthy they are. There is a major plumbing problem within the banks having to do with debt and also having to do with the fact that deposits keep declining. And again, when you look at who's leading the charge about not having more money set aside, it's the big banks. It's J.P. Morgan and Citigroup and Bank of America, right? And they're, oh, no, we got it right. I would get it, right, if it was all these little banks that you never heard of, right? I could understand, hey, their position on this, but it's the big banks that are having the biggest problem with all of this. And then again, they've been playing a shell game. They've been dishonest about how healthy the system really is. The system that they put in place after too big to fail doesn't actually work, especially when you left rates at zero for 15 years. Patriot Radio News Hour. I'm sure it'll be fine. Yeah, don't do anything. What's the worst that could happen? Right? Your bank goes out of business. Maybe you get your money. Maybe you don't. I don't know. We'll be back. Final segment. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Wednesday. Again, today's special. We got two really good ones for you today. The $10 Liberties, 1 through 9, $1,095. 10 or more, $1,090. 20 or more, $1,085. Rolls of silver quarters, 40 pre-1965 silver quarters, $190 a roll. If you buy 25 rolls or more, $185 a roll at 800-951-0592. So we're talking about, why is Jamie Dimon so upset? Well, now you know. He's not dumb. I wish he was. He's not. Jamie Dimon's a smart man. I don't like him, but he knows how to play the system. And here's what he sees. Well, let's see. The reverse repos are going to be out of money in the next in less than 90 days. That's not a good thing. A lot of liquidity now gone. The Fed's emergency bank facility, right? Same thing. That comes to an end, right? Uh-oh. Even less liquidity now. Oh, wait, now you want us to have more money set aside that we can't invest with. Jason, it's pretty easy to see we've got a major problem. And I think this is why when you look at Wall Street right now, they haven't given up on this March rate cut. And I know, right, we get it. Well, but the numbers, the jobs number, the retail says it's not bad enough yet for the Fed to cut rates, and we still have inflation. That's not what they're looking at. This is what people need to understand. The reason why they're calling for rate cuts is because of the liquidity problem that exists inside the banks. And the bottom line, the Fed has been covering it up for a long time.
And liquidity problems come because you don't keep pumping money in, because that's how this debt money system works, is you got to feed the monster. And so they have nowhere to go with it. And lowering the rates, if they don't get their number below the 3 range, we know what's happening. And here's the thing, Joe, we talked off the air, I think yesterday, I told you, I still think they've been printing money and giving it to very specific areas. I watched a whole video on how this is done, these facilities that get cash that's pumped in. And if they're pumping hundreds of billions of dollars into the system, that just doesn't go to the people, which doesn't inflate on the front end. It still can inflate on the back end. When everybody needs money, when everybody needs to take care of themselves, the inflation will come back in a major way. Of course, the markets are happy about lower rates, Joe. It's just kicking the can down the road one more time, and that's the only solution that anybody seems to have right now. That's what all these Fed facilities they've been making up out of thin air, that's what all these are, is just kicking the can. They should just call it kicking the can down the road 1, 2, 3, 4, 5 as they just keep doing it.
Yeah, and it is. It's like the biggest game of kick the can, but they're kicking the can with your money, with your financial viability. This is what they're kicking the can down the road with. And again, I think it's two different things, right? If you're just talking about inflation in the economy, but no, the Fed shouldn't cut rates. Why are they insisting they need to cut rates? Because they got a plumbing problem, they got a financial problem, and it's gonna come crashing down. 800-951-0592. Take this opportunity. Buy gold and silver for less. Jason and I coming right back with the half empty.